Hey there! Welcome to Whiteboard Invest, your number one go-to source for clear and concise investing knowledge, explanation, and news updating daily. Let's dive into the latest buzz from the financial world, shall we? Speaking of markets, have you heard about the new Hong Kong ETFs? They're about to kick off, and that's big news. It's like a fresh wave of options for investors. And let's not forget the macroeconomic news, especially from Europe. It's all connected, like a giant financial web. Now, for the crypto enthusiasts, the Bitcoin SP ETF and the flow of funds in the US today are hot topics. So that's the scoop I wanted to share with you today. Keep your eyes peeled. It's a wild ride. So, you've probably noticed the political roller coaster lately, right? Well, it's shaking things up in the finance world too. The US Treasury Secretary is rolling up sleeves for some fresh sanctions on Iran. It's like a sequel to the many we've seen in the past few years. Now, this might just be why gold prices have been on a hike since last year's end. Countries are stocking up on gold like it's going out of fashion. We're talking about China and a few others. Can't recall if Iran's on that list, but they're all piling up the shiny stuff. But here's the kicker. It's not just about sanctions. This gold rush is a power move in the global game of economic chess. And guess what? Some countries are now eyeing Bitcoin too. El Salvador's already on board, and even the big players like China and the US are sneaking some Bitcoin into their vaults. It's not headline news yet, but give it time, and it might just be the next big reserve asset. In a nutshell, nations are building their treasure chests ready for whatever the world throws at them, be it sanctions or economic shakeups. It's all about having that golden parachute or a Bitcoin backup when the going gets tough. Moving on, Russia's central bank is finally warming up to crypto for international deals. It's a big deal because they've been on the fence, especially with the finance ministry being all pro-crypto for a while now. With all the sanctions making trade tough, Russia's looking at crypto as a workaround for exports and imports. They're starting with a trial run to keep things safe, but they're still iffy about crypto going mainstream at home. They're worried it might lead to money flying out of the country. So, while folks in Russia can buy Bitcoin and Ethereum, there's a cap on how much they can get. It's all about keeping the economy stable while finding new ways to move money internationally without the usual banking hassles. Pretty clever, huh? Hey folks, let's keep the financial news train rolling with some big updates. So, Bitcoin's been hovering around $64,000, but it dipped a bit to $63,830. Nothing too wild, right? Now here's the scoop everyone's been waiting for. Tether's gone and done it. They've printed an extra $1 billion. Yep, you heard that right. Remember last weekend when Bitcoin took a nosedive to $60,000? Well, since then, we hadn't heard a peep about new money being printed until this morning. And Tether wasn't alone. Circle joined the party too, cranking out about $300 million USDC. Looks like the money printers are back in action. Now, I know what you're thinking. Should we be worried? Well, as long as Tether and Circle keep those printers running, I'm not losing any sleep over it. It's when those machines go quiet for too long that I'll start to sweat. So let's keep an eye on those printing presses, shall we? So, you know how some folks have been giving MicroStrategy the side eye for hoarding Bitcoin like there's no tomorrow? Well, Reuters dropped a bit of gossip that a bunch of people went ahead and shorted MicroStrategy, betting big bucks that it would tank. But here's the kicker. Despite the market doing a bit of a jitterbug lately, MicroStrategy's stock, just like Bitcoin, has been on a bit of a winning streak. So those naysayers who shorted it, they're probably biting their nails because as of March, they're down by a whopping $1.92 billion. Ouch, right? Goes to show, sometimes the market has a mind of its own. All right, let's chat about the Bitcoin halving hype. We're super close now, just a hair's breadth away with only 2 days and 21 hours left on the clock. And have you seen that viral snippet by Jimmy Crow? It's a quick 19-second joyride through Bangkok, but it's packed with excitement. There's this massive billboard that's hard to miss, all lit up with Bitcoin halving and a countdown that's ticking away. It's right there on the main avenue, and you can't help but stare at the screen showing the countdown in Bangkok. It's pretty cool, isn't it? Makes me wonder if any of you watching are from Bangkok. If you are, hit up the comments and give us the lowdown. All right, let's break it down into a more casual chat. So, Jerome Powell, the big boss at the Fed, just had a bit to say after that eyebrow-raising CPI data last week. And, yep, it's the first time he's spoken up since that report came out. The gist? Well, he's kind of bummed because the Fed's inflation goals are looking a bit like a mirage in the desert this year, just out of reach. Now, he was speaking at this fancy economic forum at the Wilson Center in Washington, and he laid it out pretty clear. The recent data? It's not exactly giving him the warm fuzzies. Instead, it's telling him and his Fed pals that they've got to buckle up for a longer ride to hit those confidence levels they're aiming for. But here's the kicker. Even though inflation's been playing hard to get, Powell's not hitting the panic button just yet. He reckons the current policy's pretty solid for tackling the risks they're facing. Translation, don't hold your breath for any wild swings in interest rates. They're likely to keep things steady as she goes, at least until Powell feels a bit more sure-footed about where inflation's headed. And despite all the chatter about needing rate cuts from the White House to the Treasury, Powell's laser focused on inflation. He's like a goalie that's only got eyes for the ball. So, unless World War III breaks out, or the economy hits a major speed bump, don't expect the Fed to flip the script on interest rates anytime soon. And as for crypto, Powell's words today didn't really shake things up much. The crypto market's got its own beat, dancing to the rhythm of a whole different drum. So, we're in a bit of a pickle with inflation, right? It's like everything's gotten way more complicated. And no matter what the Fed says, there's this guy, Anthony Cerami from Skybus Capital, who's pretty convinced the Fed's going to have to slash interest rates because of this or that, maybe 3 or 4 times this year. But here's the twist. There's this other dude, Jim Cramer, who's been poking fun at the rate cut hopefuls all day long. He even posted a video saying higher for longer, kind of throwing shade at the optimists. Now, if you know anything about Jim Cramer, it's like he's got this reverse Midas touch. Whatever he says, expect the opposite. So if he's preaching higher for longer, we might just see those rate cuts coming sooner rather than later. But here's the thing I really want to share with you. When you scroll through social media, everyone's got an opinion, right? But the truth is a rare gem. Opinions are like leaves in the wind. They swing wildly. Just like how some folks, like our friend Cerami and others, are predicting doom and gloom with multiple rate cuts, while others are sure the Fed won't budge on rates. It's like one side's super pessimistic because of the rate cuts and the other's all sunshine and rainbows. But the truth? It's probably chilling somewhere in the middle. I'm thinking maybe 1 or 2 rate cuts this year is a safe bet. Anything more than that, and we might be looking at a financial storm brewing. And if the Fed stands firm and doesn't cut rates, it's not necessarily bad news. It could mean our economy's still rocking, people have jobs, salaries are flowing, shopping's happening, investments are growing, just like we've seen in the past few years. So not too shabby, right? But yeah, finding that sweet spot in the middle, that's the real deal. So over at the European Central Bank, ECB, Christine Lagarde is hinting they might cut interest rates sooner than we thought, like maybe even this month. It's a total 180 from what the Fed's doing across the pond. They're playing the waiting game, possibly until January, before even thinking about trimming rates. But the ECB? They're not up for waiting. High interest rates have been dragging Europe's economy down, and they're ready to jump into action as early as June. It's like they're on a seesaw, and high rates have pushed them too low. Now, when asked how many times they'll cut rates, Lagarde played it coy and didn't spill the beans. But it's clear Europe's itching to make a move. Just look at the UK. Unemployment jumped from 3.9% to 4.2%, the biggest monthly leap since the pandemic hit. It's got everyone on edge, and the Bank of England is probably feeling that rate cut itch too. And here's the kicker. All this rate cut talk in Europe is making the US dollar look like the belle of the ball, with the DXY index expected to climb unless something major shakes things up. But hey, let's not forget what Bloomberg's been preaching. At the end of the day, it's all about protecting your assets. You work hard, you save up, and then you gotta park your cash where it won't lose its mojo to inflation. That's the real deal. Finding that sweet spot to keep your purchasing power strong. So Hong Kong just made a pretty cool move. They've officially given the thumbs up to Bitcoin and Ethereum ETFs. Sure, they took a bit longer than the US to approve a Bitcoin Spot ETF, but they beat the US to the punch with the Ethereum Spot ETF. Now, the word on the street, thanks to OSL, the middleman company, is that trading for these shiny new ETFs is expected to kick off by the end of this month. That means investors in Hong Kong are about to get a sweet new menu of investment options with at least 3 ETFs to choose from. While we don't have the deets on the trading volume yet, it's definitely a step in the right direction and a big win for crypto enthusiasts. It's like Hong Kong is rolling out the red carpet for crypto investments, and it's all happening before the month is out. Pretty exciting stuff, right? So we're all waiting on the edge of our seats for some stats from BlackRock about their Bitcoin Spot ETF, right? But today we've got a bit of a plot twist. Our scale's been selling, but it's not like a blockbuster sell-off, just $794 million worth. On the flip side, Arvest's fund has let go of about $13 million. Now this isn't the first rodeo for Arvest. Remember back in early April, on the 2nd, they had a couple of days where the cash was flowing out. But here's where it gets interesting. The other funds are starting to stir a bit. They're not making waves with huge amounts, but hey, it's not zero anymore. We're talking about a modest $2 to $3 million coming in. And Fidelity, they're playing it cool with a $14 million intake today, which is a step up from the past couple of no-show days. But the real MVP here is BlackRock. If they've scooped up more than $84 million today, we're looking at some positive cash flow, my friends. Now, some folks are scratching their heads, wondering if something's off, because how can so many funds have zero cash flow? It's like, is nobody buying or selling, or are the numbers just perfectly matched day after day? Seems a bit odd, doesn't it? But hey, that's the market for you, always keeping us guessing. Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.